What's going on, guys? Here to quick trade breakdown as to why I took this short trade here, right? This selling opportunity here, right? So I have a three-step process. So step one is our higher time frame, right? What is our higher time frame doing? To kind of overall frame the trade and our bias for the day, right? So the first thing is when it comes to higher time frame. So higher time frame, right? So we want to understand how institutional order flow, IOF, right? Draw liquidity, and then our point of interest. All right. This is for the higher time frame. You want to understand these three things, right? So looking at the higher time frame, I would see that we're making lower lows, lower highs, respecting bearish order flow. So in my mind, the higher time frame, all right, the order flow was bearish until proven otherwise. All right, my draw liquidity, all right, obviously is previous weekly low, right? This lower here that we left right before tapping, right before that weekly fair value gap. All right, so that was my drawn liquidity for the week. All right, and then my point of interest was this bearish fair value gap. Right, so we'll write this down here. Bearish. All right, drawn liquidity, previous weekly low. Point of interest, 1 hour bearish fair value gap. All right, perfect. All right, so now step two is our lower time frame protocol, right? Which is we want to see SMT, right? I want to see a change in state delivery, right? CSD. We want this happening during our time of interest. All right. So we go down to lower time frame here. All right. As to where I actually took this trade. All right. So once you hit our point of interest, we can now scale down to lower time frame. All right. Another thing we noticed that the 9:30 open, we pushed above it, which is another sign that market will most likely want to trade lower after that. Also, we're above midnight open with a lot of sell side liquidity below us after taking London highs, previous daily high, and obviously Asia high. All right, so S&T, we see with the S&T detector, we had 10-minute S&T, right? And this signals to us that there's a potential reversal being put into play. All right. And the only way to confirm that SMT is if we have a change state delivery. So we had an inversion gap. We had an inversion gap, IFEG. All right. So if market wants to continue higher, it's going to respect bullish value gaps to go higher. Right. But we see that we had a change in state delivery right here, right, on both markets. That's the key thing. You want to have it on both markets. So we've seen ES have a CSD, also NQ, which we trade, right? And we want to make sure this happens during time of interest. So I was trading the first macro, right? So that 9:45 a.m. to 10:15 a.m. macro, right? So if you put these lines here, we can see that during 9:45 to 10:15, we had the S&T price CSD, which shows us that time does meet price, right? Time meets price here. All right. So my last steps, all right, is my execution protocol. Execution. All right. So step one, all right, obviously you want to have one of our entry models. All right. Stop loss. And then obviously our targets, I should say. All right. So entry here, we entered off of the the tap of this inversion gap. Once we see price tap back into the inversion gap after the close, right? Close below it, trade back into it. Right, stop loss. I had a type 1 stop loss, right? So type 1 means my stop loss was at the S&T high, right? Type 2 is when you kind of scale in after it hits your entry area and the stop loss is too big, you can drop down lower time frames and scale in even more, right? But I had a type 1, right? So I actually entered after the closure. So this candle here, as it tapped back into it, entered. Stop loss, the safe stop loss is at the ST high, right? It's had at the body right there. And then your targets, you always have two targets. First target being original consolidation, and then your target two would be a draw liquidity. So original consolidation, I just took it to the London low, right? I honestly just got out there, but on a higher time frame, right? Obviously, original consolidation would be the Asia low. Right, Asia low here would be the original consolidation. This could be an area where you take partial profit. Right, I just completely got out there because it was 234 points, almost 235 points, and a 1 to 5.4 risk to reward. I was completely fine with that. All right, you could take out a partial there or move to break even, and then take off more than half your profit there, and then obviously the draw liquidity would be previous weekly low, but you can also take a partial profit there as well. There's a lot of New York targets that we could have targeted here, but kept it for the guaranteed hit right there at the London low. All right, so one more time. All right, when it comes to the reversal sequence, all right, first of all, you understand what the high time frame is doing, right? Are we bullish or bearish based on market structure and P is being respected, right? So step two, what is your draw liquidity? What is market looking to target? And then step three, how is market going to get there, right? You need a point A to point B, right? Point A meaning your point of interest, point B meaning your draw liquidity. Right? We had a 1 hour fair value gap, draw liquidity obviously pretty weak low below, right? So once we get into the point of interest, all right, we want to understand our steps when it comes to lower time frame, right? You want to see SMT, right? I saw 10-minute cycle SMT here. All right, and then to confirm the SMT, we want to see a change in state delivery, which we had an inversion gap right here, which confirmed that market is getting ready to shift order flow, right? And we had this during our time of interest, which is 9:45 to 10:15, that first AM macro, right? If it doesn't happen in the first AM macro, the second chance would be 10:45 to 11:15. All right, but consider that the S&T and CSD happened during the macro. You can enter anytime during and after that macro time. All right, and then last step, execution protocol here, right? What's your entry? We had three entry models, meaning the IFEG, a breaker, or a mitigation block, and then breaker slash mitigation block, and then the last uh, entry model we have would be the breaker plus inversion gap, which is the strongest one. The IFEG is good enough. Stop loss at the S&T high, and then target one, original consolidation, target two, your draw liquidity. All right, so pretty much it, everybody. Obviously, I took this trade live, as you can see here. All right, I'll drop it. They can see that obviously I was in the trade live with the profit there, and that's it. All right, so I'll see you guys in the next video. Thank you guys for watching.